Earlier today, I said there's really no economic news other than existing home sales, and they were dismal. Okay, so that information came out this morning. The Federal Reserve's minutes from the last meeting that they have came out, and the market's kind of just absorbing that data. We have mortgage rates just up a tick right now, but I want to share with you guys some information and how some of this information kind of gets skewed and everything else. CNBC just did a fantastic interview with Redfin's CEO. This guy's usually really upbeat, but in this video, he just seemed like humdrum. I'm going to let you watch it, and then after it, we're going to break down some of the things that he talked about. He talked about housing, the supply, the demand, how many units are selling, how much inventory there is, and what the Federal Reserve is going to do. That's going to be a huge pivot point to what happens with real estate. So let's get over to it. We have the MBS market. It's down 16 right now based on, there was a lot of really not good news out today, but let's see what the CEO of Redfin has to say, and then we're going to break this down. You're going to find this very interesting.
Had a long discussion about what the magic 30-year fixed rate would be to entice that supply and that demand. What do you think it is?
Well, getting below 7% is an important milestone, and we're hovering right around there. The inflation print came in nicely on the 15th. So mostly, we think the housing market is going to improve over the next half of the year.
And is that contingent on a rate cut, or can we do that in an existing environment where at least the expectation of lower rates drives demand?
I think that most of the mortgage market has priced in a rate cut. So if there weren't a rate cut, that would be a problem. And then you'd see slower growth or even negative growth in the housing market. But mostly we hit rock bottom in the first quarter of 2024. And I would expect the housing market to do a little bit better through the rest of the year. Inflation looks reasonable. The mortgage market has settled down. And people have just been putting off their home buying plans for a long time, and they're getting antsy. So demand has been reasonably good.
Okay, so let's break this down. He talked about inventory and other things. Let's kind of break this down. Here's the headlines that came out today. Home sales slipped unexpectedly in April despite big gains in supply. So the media is now saying there's going to be huge supply gains in the supply market. So let's go back. Let's break down this data. The median price of existing homes sold in April was $407, an increase of 5.7% year over year. And people are still telling you that it's going to be a crash. Markets are going to be down 50% or more, but whatever. Inventory right now rose 9% month over month and is up 16% from the year before. So you're thinking, okay, it's 16% more than where we were. We have a 3.5 month supply of inventory. So let's kind of break down these numbers. But the first thing is, let's see how bad it is. He said the first quarter of 2024 was kind of the worst ever. Well, we're coming off a year in 2023 that was what? Existing home sales dropped to their lowest level in 30 years. So the first quarter of 2024 is even worse than that. Okay, so that's not good news on that end of the equation. Let's see. Right now they're saying we have 3.2 months of supply of homes available. Over here, CNBC has it 3.5. So let's go with the 3.5. How much is normally needed for a good market? Okay, usually you need 4 to 5 months of supply in an average market. So we're getting closer to 4, but we're still not there yet. So the supply still isn't kind of busting out of its seams. If you go over to here, this is how much inventory is on the market right now. And you're going to say, whoa, there was nothing back in December. And now look, this completely spiked up. But you got to put this in a context. Let's go over to a 5-year chart. Okay, how does that look? Okay, let's go to a 10-year chart. Even worse? Oh, how about the historic chart? We're down here. The lowest level that's ever been since they started recording this stuff. So there's no inventory. What you want to focus in on too is right through here. Why did the prices of things come down? And I teach you guys this on a daily basis. If you have too much of something hitting the market, it's going to drive down the prices so people can buy up the stuff. It's like when Costco and those places, not Costco, but when they have clearance sales to get rid of the inventory, they drive down the prices and that's what happens. So This is where we are. We're at the lowest levels in basically history. Now, he also mentioned what the Federal Reserve is going to do. So let's get over to the CME Fed Watch tool. This is actually, you can go to this website, it's the CME Fed Watch tool. And this tells us what's the likelihood the Federal Reserve will change the federal funds rate at the next meeting or in the next few meetings. Now, the federal funds rate is what the Federal Reserve controls. They don't control mortgage rates or car loans or anything like that. They control the federal funds rate. So if you scroll down through here, you're going to see the probabilities of those changes taking effect. So they're saying in June, there's no probability of them cutting rates. Then you go out to July. There's still an 80% chance that we're going to stay right there. So these numbers have been moving. These numbers were over these numbers were predicting a rate cut in June, July, and so forth. Now there's even coming back saying in August and November, there's a 50% probability that they might cut rates. I'm saying there's going to be 1 to 2 rate cuts this year. They're going to be 25% apiece, but the mortgage market's still going to be dependent on the inflation numbers. And as you saw in the charts when they were going through how much rents have dropped in a lot of major areas or how much rents increased over the last year, the study showed it was up 1%. But the Federal Reserve's numbers, when it comes to part of the CPI, is showing that number up 5%. So this is kind of the anomaly that's taking place right now with a lot of the numbers when it comes to inflation numbers. So I'll leave that up to the government data. I'm just here to present this information to you. So what this is telling us is it's still a seller's market because there's not enough homes in inventory. And, the outlook from Redfin is saying, well, they might get a little bit better. Guys, I don't know how it could get much worse, especially now that we're coming off, the worst year ever. Where's that data come in? Let me find that for you again right through here. We basically come off the worst housing market that we've ever seen in the past 30 years. So if you've been sitting on the sidelines waiting for the markets to crash, you're not going to get it. You don't have the supply. What's holding people back is interest rates. And that's right through here. So when rates start to come down, you're going to see people back in the market looking to buy. So my name is Dan Frio. I do this report on a daily basis. I'm actually a mortgage loan officer licensed in all 50 states. Yes, all 50 states. I'd love to help you if you're out there trying to buy your first house, maybe your second home, maybe an investment property, anything when it comes to real estate, I'd love to help. Go to therateupdate.com. Here's my site. You can apply now right up there, or you can even scroll down to the bottom right through here. You can give us a call or an email, and I promise you I'll reply on both of these. Our 800 number is right there, and my email address is right there. Thanks so much for watching, guys. That's my midday report today. If you like my videos, don't forget, you can subscribe right down there. Take care, folks. See you later. Bye-bye.